Hi, I'm Jeff Camarda, and welcome to another Camarda Wealth Moment. As we've said many times in this space over the past several years, the U.S. markets have been on a tear since the 2008 meltdown, easily eclipsing most of the rest of the world's stock markets since the market bottom in March of 2009. There have been many reasons for this, but probably not as important as the Bernanke Fed's wise monetary policy, pumping easy money into a stone-cold economy, not only firing it up, but helping the U.S. stock market to soar like a hydrogen balloon as well, by both kindling economic hope and leaving return-hungry investors few alternatives. It works swimmingly, restoring the economy to where higher, more normal interest rates seem tolerable and even necessary, but also bringing the U.S. stock market much closer to fair valuation or even overvaluation. U.S. stocks are now feeling the first buffeting of headwinds, with borrowing costs sure to go up, a high dollar hurting exporters and raising many raw materials prices, and the likelihood that many companies will face flat or even declining profits for the first in a long time. And again, as we have often noted here recently, we are not predicting a bear market in the U.S. anytime soon. While we think the easy money's long gone and that things will get a good bit bumpier going forward, we do expect the long U.S. bull market to continue to bounce higher, with many more record highs ahead. No dead cat bounce yet, but it will be an old bull bouncing to be sure. But the go-go baton's clearly been tossed overseas, as we have long been suggesting, and that should be very, very good news for asset allocation investment strategies like Camarda's ISIS portfolios. Consider, as I write this just before tax day, and after a good week in the U.S. markets, the Dow Jones up 1.3% for the year. The S&P 500's up 2.1%, the 400's mid-caps up 5.7%, and the S&P 600 small caps up 4%. Now, this illustrates a good point that any sound asset allocation strategy should include asset classes besides U.S. large cap, what's in the Dow Jones and S&P 500, in which too many investors seem to have too much of these days. But look at what's going on overseas. Europe is up some 20%, Germany over 25%, China's up nearly 25%, and long, sleepy Japan's up over 14%. Even stress-laden Russia is up over 26% for the year. Of course, not every non-U.S. country is up so much, and prudence demands we diversify not only into many countries, but also into many asset classes besides non-U.S. stocks as well. But you get the point. This is where sticking to a long-term strategy like the asset allocation in Camarda's ISIS can really pay off. While exceptional strategies can have many market-beating years, last year, 2014, was not a good one for allocations and mixing healthy dollops of non-U.S. stocks like Camarda's ISIS. But it is where patience and staying the course, uncomfortable as that may feel, as short-term waves rock and roll the boat of our prosperity, can produce major rewards and significant wealth growth over time. Over the decades we've been doing this, one observation seems to have been repeatedly confirmed, and that's that investors who stick with a sound strategy, whatever it may be, over several market cycles seem to do quite well. Those that chase performance, cashing in a temporarily underperforming strategy, which may be about to take off, for last year's hot one, which may be about to tank, in the end doesn't seem to serve people very well. Those investors often hurt themselves, perpetually selling perhaps at the worst time, and condemning themselves to not becoming nearly as wealthy as they might otherwise have been. Asset allocators, I strongly sense this could be your time to shine once again. If the first quarter's trends are any indication, and I surely think they are, this could be a blockbuster year for those with non-U.S. components in their overall portfolio strategy. Stay the course. The harbor lights should be coming up soon. This time next year, your ship may really have come in. Thanks again. This is Jeff.